spotlight as to what exactly is going on when it comes to Ujjivan Small Finance Bank. We've got Ujivan Ittira Davis, who's the MD and CEO, now joining in. Thanks so much for taking time out. Let's talk numbers. And you've delivered a strong growth number. Your net interest income as well has grown, but your employee costs have shot up about 40% on a quarterly basis. What led to this uptick, and how should we see this trend going forward?
The employee costs actually is a good point to discuss, because that is investment for the future. We have in this year put together about 100 branches. It will be 100 by the end of the financial year. And last year we had 50 branches. Now these branches have to be manned. They have to be set up and ready to go. The gestation period is around 18 months on an average. Could be less in some cases, like we have seen in Telangana. So all of these are investments which we are making for the future. So there is always this leading and lagging. You cannot be perfect timing on this. So some of the expenses is we have hired a lot more people. We started the year, we have added about 5,000 staff during this year. And that is investment for the new branches, for the new businesses that we are putting together. And I think it's all moving in the right direction. Between one quarter and the other, there can be some, slight variations.
Okay, point taken. So that's the view coming in as far as the investments that you are making. But I also wanted your take regarding some other numbers as well, because if I look at the branch addition as well, your target was around 45 for the second half of the year. We have already seen 29 additions. What's the target of FY25 now in terms of the growth, in terms of the branches going forward?
No, we have put in place, between last year and this year, this financial year, 150 branches. We will add to that during the next financial year. But our objective in 24-25 is to make sure that these branches which we have put in the last 2 years become profitable and are able to provide all the services that our customers need. So that is the objective. We will add to that selectively. But, post-COVID, for 2 years in COVID, we didn't add any branches. So we have caught up. We are happy with that, and we will be moving forward. But, in line with, the branch network, we are also pushing very hard with our digital offerings. And I think that is a very important part. Digital will now come to play a role on the side of the brick and mortar. And these two together will be the way in which we grow our business. Because a branch is a fairly expensive proposition when we look at it. And I think this is a good way to supplement that with digital.
No, sure, but I understand that. But you do, you will add the branches as well, right? And you said how it's expensive affair. So what will it mean to the cost to income ratio going forward?
Yeah, next year we are looking at a maximum of about 50 branches. So it's not as much as this year. So to that extent, the overall cost structure will be less in 24-25. And, it again depends on the timing when these branches come in, whether it's in the first half of the year or in the later half. But having said that, I think, the organization and the bank is very well focused on growth. We see, potential to continue in the businesses that we are doing. And we are adding a few new businesses as well, which will help to balance the secured and unsecured portfolio.
Okay, so how is the growth in the unsecured part of the portfolio going? I know you want to move it, the mix, you want to move the secured part to 40%. How is the growth in the unsecured part? Because that, seems to be the talk of the town right now. Regulator appears to be, uncomfortable with unsecured, very high scorching growth. Some of the players actually are showing. What level of growth would you like to keep your unsecured part of the business?
Yeah, our overall growth that we are looking at, for this year, as we had indicated, is around 25%. And given that the secured book will have to grow a little faster to balance out, because we're trying to increase the secured book. So as far as we are concerned, I don't think the regulator will have any problem, because we are slowing down a little bit on the unsecured so that the secured picks up. So I think overall we are spot on, where the regulator would not be disappointed.
The regulator will not be disappointed, but I also wanted an update regarding the reverse merger as well. If I had it right, the hearing was expected at the end of the month, right? Is there anything fresh that you can share with us with respect to developments there?
No, we are waiting. 30th is the scheduled date of the hearing, and we hope everything goes well and we get the go-ahead, in which case, we are looking to complete the process by the end of this financial year.
Okay, point taken. I also wanted to understand in terms of the secured loan book. I think the target was to achieve the number of 40% by FY26, and you're already over 28%. You did allude to the fact that there shouldn't be worry on the unsecured business, that you're already going slow. But with respect to the secured book, are you confident of meeting your target or even ahead of the set expectations?
No, in looking at the secured portfolio, we are growing fairly well within the secured portfolio, but we have not closed out any inorganic growth options, which we will consider next financial year if it is a way in which we can get to that target faster.
All right. And can you give us a sense before we let you go in terms of your target for net interest margins? 9% for FY24. We're already at 8.9%. Does this indicate an uptick in the next quarter? Will you be revising your targets?
No, we have said 8.9 to 9 is our guidance, and I think we will stay with that. We have done certain adjustments in terms of the business to be able to improve yield a little bit, so and the margins. So hopefully this quarter will be slightly better than the previous 2 quarters. But overall, the guidance is for 8.9 to 9%, and we'll stick with that.
Okay, on that note, we let you go. Appreciate you making time and speaking with us, but let's shift focus